Hey guys, I hope you're doing well. Yeah, welcome to the Forex Time Continuum community. Yeah, yesterday I did a video on lower time frame confirmations on the buy models. Yeah, so many people requested I do the sell model, which is more of the opposite. Yeah, so on this video there isn't that much. I'm just showing the sell confirmations, the lower time frame sell confirmations on sell setups. Yeah, so subscribe, like and share my content so that we can help as much people we can. Yeah, so as you can see, we have two models. We have the ICT and the SND model. Yeah, so for the ICT model, yeah, it's more of the opposite of what I talked about yesterday. You can see we have our setup there. Yeah, the market makes a high, then makes a low. There is a break of structure, the BOS, and then you have that return. Yeah, where I've written entry, that's the return to the order block. Yeah, so you have to wait for the market to reach your point of interest. Yeah, then you now look to the lower time frame. You wait for a low to be formed, a low below the previous low, so that the market shifts the direction. Yeah, breaks the structure. Then you wait for the return to that order block responsible for the break of structure that pushed the price past the previous low. Yeah, okay. Yeah, so you have to be patient. Yeah, don't be an aggressive trader, because it will play around with the emotions. Imagine if you entered at that high, yeah, then you'll be in profits of like 20 pips, then in the next 30 minutes you're back to zero. Yeah, it will mess your psychology. Yeah, better wait for the safer entry. Yeah, at that RTO, the return. Yeah, so that's the ICT model. Yeah, when an ICT model present, you trade it. Yeah, when an SND present, you trade it. Yeah, remember yesterday I told you guys, you trade what the price presents. Yeah, don't say I'm an ICT die hard, so when an SND setup present, I won't trade. No. Trade what is currently. Yeah, what the price is presenting currently. Yeah, so I have explained the abbreviations. Yeah, the OB is the order block, the BOS is the break of market structure to the downside, because we are now breaking the structure to the downside because we are selling. Then we have a high and a low, a return to origin or the order block. Then we have a low. Yeah, so that's the ICT model. Yeah, let's look at the SND, lower time frame sell confirmations model. Yeah, this is my favorite. SND is my favorite, but it doesn't mean I don't trade the ICT. Yeah, when an ICT present, I trade an ICT model. When an SND present, I trade an SND model. And remember, you have to have many conferences, at least 3. Yeah, you can have these lower time frame confirmations. You add like an divergence. Yeah, those are 2. You can add a Fibonacci retracement tool. Yeah, the 80 levels, 78 and above levels. Yeah. So for the S&D model, the price makes a high, then makes a low, then the low pushes the price to make a high and breaks the previous high. Yeah, then the price drops. As it drops, it creates a supply zone. The supply zone can be a drop based drop supply or a rally based drop supply. Yeah, then that supply zone pushes the price below the previous low. Yeah, so there is a shift of the market structure to the downside now. So when the price returns to that supply zone, which is in line with the QM level or the right shoulder, the left shoulder, sorry, that's when we enter the market. Yeah, so as you can see, as I told you yesterday, the S&D model has more, more confirmations, or it's more supportive. Yeah, because you see, there is the QML, there is that supply zone in line with that QML. The zone is significant. You see, there are a lot of confirmations on the S&D model. Yeah, so we've said the market makes a high, then a high. The market makes a high, then the high, the low. The low pushes the price and breaks the previous high and forms a high. Then the high drops the price. As it drops, it leaves a surprise zone, which we've said it's either drop based drop or a rally based drop, surprise zone. Then that supply zone breaks the structure to the downside, because it pushes the price beyond the previous low to make the lower low. Yeah, and those are the two features of the S&D. You have to have those two features. Not actually, it's three features. Yeah, so when the price comes back to that level, the QM level, which is in line with the left shoulder, yeah, taking note of that supply zone. Yeah, you have your entry. Yeah, so I prefer this model because as you can see with your own eyes, it's more realistic, and it has more information. Yeah, so guys, as you requested for this video that I do the sell one, because some people said they're getting confused to do the opposite of the buy model. So I decided, why not upload a sell model. So this is it, guys. Backtest both models. Whatever model present, trade it. Yeah. So I think that's it. Yeah, I will see you in the next video. The next video will be the trade line breakout strategy, the supply and demand style. Yeah, I'll upload it along the day or tomorrow. Yeah, so guys, keep sharing the links to our community, yeah, so that this information can reach a lot of people. Yeah, because as I told you yesterday, guys, I created this community in order to help a lot of people who've been struggling in forex. Yeah, because before you learn the real deal in forex, you're gonna pass a lot of shitty stuff. Yeah, so I trade the supply and demand model. I find it more realistic, and more informative, more supportive. Yeah, so I'm not saying any course is better than the other one. Yeah, you trade the one you're comfortable with, and the one you see, has smaller losses. Remember, it's not all about profits. Yeah, we also after making small losses. Yeah, we have to. Yeah. Remember, it's not all the time that you make profits. We are also looking at analysis that even if we get stopped out, we are getting stopped out at very small losses. Yeah. But by the end of the day or by the end of the week, your profits are more than the losses. Yeah. So one thing you should accept in this game is that losses are part of the game. Once you accept that, you are good. Yeah. Another thing is one is you accept losses as part of the game. Yeah, because if you don't accept losses are not part of the game, that's when you get yourself trading without stop losses. Yeah, no, how many people have that problem? Yeah, because you're not accepting to lose. You see? Yeah. Once you accept that losing is part of the game, you'll now be able to put your risk, to set your stop losses. But if you don't, you find yourself trading without stop losses against these big boys, they're gonna wipe your account. Yeah, so one is to accept. The other thing is risk management. Yeah, that one you have to be on point. You have to calculate your risk. Yeah, have a trading plan. Like for me, I have a rule. My rule is I only risk the previous profit, 50% of previous profit, nothing less, nothing more, nothing less. Yeah, if I made 100 USD on my previous trade, I can't risk more than that 50. You see, so you have to have a trading plan. Another thing is profit, how to take your profits. Yeah, like for me, I have my trades are usually 10 to 15 pips stop losses. So when my trade goes to my direction with around 20 pips, I usually pay myself something like 50%, 40% of the positions. Yeah, then I let the rest run. Yeah, I just monitor them. By the way, guys, also when in profit, you monitor your trade on the lower time frame so that you can see when the market is about to reverse or what it's doing. Yeah, because remember, before the market starts breaking the structure on the H4, it must break the structure on M15 first. So you have to monitor your lower time frame, see what the lower time frame is doing. Yeah. Also monitor your profits on the lower time frame because the price is fractal. Yeah, so for M15 to break the structure, it starts with M1, M5. Yeah, so you need to monitor your lower time frame when in profit, so that you can see when the market is changing the character or the changing the direction. Yeah, so we had how many? So one was accepting losses as part of the game. The next is risk management and trading plan. Yeah, then there is that monitoring your trade and how to take your purchase and break even. Yeah, so that you can stabilize your psychology, because we are humans. We are prone to mixed psychologies and emotions. Yeah, and also when you are in a trade, to avoid a lot of emotions, try to do something. Yeah, that something that can occupy your mind. Yeah, because if my friend, if you are in profits and your eyes are always on the screen, you're gonna get some emotional. We are humans. You're gonna get emotional, start seeing like the market is reversing. You find yourself running with few pips profit. Then the market eventually goes for 200 pips, and you are like, oh, what did I do? Yeah, so do something that can occupy your mind. Yeah, so guys, that's it. I'll do a video live for those points I've highlighted. Yeah, I'll see you in the next video.